be really clear about. This is basically about the status of lending in Florida, lenders, and trying to do a little bit of rumor control as well. So it is true that some lenders have actually suspended their operations or lending in either Southwest Florida, South Florida, Florida. And there are a number of reasons for that. NewRez has not. And there are a number of other lenders who have not suspended lending. What has happened is that the parameters around which loans can close, those have changed for reasons that we're going to go into very quickly. The length of how long these things are going to be in place, more stringent guidelines, a little bit more difficulty in getting a loan closed. If somebody asks the question, how long is this going to last, Nigel? I don't know. Nobody does. It's really going to be dependent upon the status of infrastructure rebuilds, individual property status, if it's a single family as opposed to a condo, and the really important factor, appraisers. I've talked to several appraisers who either lost their homes or are out of their homes. And so the pool of appraisers that are going to be available for doing appraisals, post-inspections, that's diminished, and that will probably be the case for at least a week or two. So these are all things that we have no control over, but we're going to try and give you as much control as possible by giving you information. And finally, different types of loans. Just like there are different guidelines for loans, there's going to be different parameters for closing loans dependent upon what they are. So that being said, if we can go to the first slide, Mike, please.
Yeah, I'm gonna take care of the
Jerry.
slides. Yeah. See those?
Yes, I can. Blow that up a little bit here. So we can go slide number 2, please. Click on that.
You do this, just go at the top of your screen, go to slideshow.
Yeah.
Slideshow, and then go to from beginning.
Oh, great.
You should be able to use your arrow keys. Or potentially just, there you go.
There we go.
We're just gonna start here. So we really just have 3 short slides that cover a few talking points that Nigel and I will tag team on. I think that we're going to talk about this one first, Nigel.
Sure. So just real quickly, folks, if you would look at the screen, these are the different types of loans for in categories when I talked about the different guidelines and what the parameters would be. Obviously, in the John R. Wood world, the loans that we see the most of are conventional loans, jumbo loans, non-QM loans. Those are the biggies. We will see, especially up in the Fort Myers area, Sarasota, we're going to see a little bit more FHA, VA. But these are the types of loans that normally we see at John R. Wood. And that's what we're going to address this morning. Jerry, yours.
So each one of these loans has its own parameters. And what we're talking about here are loans that would be in any lender's pipeline that were positioned to close. We had loans that were supposed to close last week that didn't. We have loans closing this week and so on as we go forward into November and so on. All of these loans are going to be subject to property inspections. Each lender will make their own decision about what's needed, and there could be variations. And so what's important here, I think, is if you have a customer who has financing in place, then you should be aware of what kind of loan they have, and make sure that they're connected obviously with their lender, and that the lender has established what parameters are going to be applied to the particular case. So as an example, you could have a situation where you had a property that's quite a distance from the water and not in a flood zone. And in a scenario like that, a lender could say, I just need an attestation from the customer stating that there was no damage to the property, and you could move forward. Another example would be that I simply need, the underwriter wants to see pictures of the property plus an attestation from the customer that says, hey, here's pictures of the property, there's no damage, and I'm agreeing to move forward with closing. And then a third option might be that the lender requires that the appraiser go out and do what's called a 1004D, or it's a shorter, quicker version of an appraisal inspection to make sure that everything is okay and that pictures were taken, and that's submitted for review and approval. So each one of these cases and each lender will have their own approach to how they want to push loans through the process. In our case, we've actually, in those instances where 1004Ds, which is actually the appraiser going on site to see the property, we've actually already ordered those for all loans at least through November. And actually some of them have already been done. So again, check in with your buyers as to what this expectation is, and just make sure they've connected with the lender, obviously, to make sure that those steps have been taken and those inspection orders have been placed.
Jerry, if I can jump in on that,
Yep.
to what Jerry just said, I'm sure some of you who are a little more skeptical are going to say there's no way a lender is going to let a buyer write a letter and take a few pictures from the outside and close the loan. Actually, that we were surprised, but that is the case. Here's what they look at. An appraiser's already been out and done a full appraisal and taken pictures of the property. We already have that. The lender has that. The fact that pictures are taken showing that the home is structurally safe and sound, and that the buyer is willing to go forward, common sense is kicked in with banks. I know we're all saying it only took 30, 40 years, but the reality is that things have gone to more of common sense mode. So it really could be that simple as a letter from the buyer, pictures of the property, and moving forward. Back to you, Jerry.
Let's go to the next screen. So again, you're as the agent for the buyer, or in this case of the seller, these are some additional considerations, some additional things to be aware of as we go through this process of reviewing files. Now, we've already talked about the appraisal inspection, which is called a 1004D, but bear in mind that when an appraiser goes back out to a property, there's an additional charge. Typically that goes to the buyer. That fee could be anywhere from $150 on the low end to $300. And, the $300 charge might be a reflection of the size of the property and the scope of work they have to do. It could just be distance. If they've got to take an entire several hours of their day to get out to an eastern property, they want to be compensated. So recognize that there are reinspection charges. Expect that the underwriter may ask questions about validating income and employment. This event has rocked some people. Some people don't have jobs. Some people don't have places to go back to jobs. Some people that were self-employed have had a disruption in their income stream. And one of the things, if you're around financing, is that an underwriter is looking for continuity and continuation of employment and income. And so they will ask those questions, particularly for self-employed people. Another item would be the 3-day waiting rule. If there's a material change to the file in any way, they could be subject to the TRID rule and have to wait 3 more days before they can go. They just can't go to closing just like that. They may have another disclosure, a 3-day waiting period, and then proceed. And then finally, with respect to interest rates, for if someone's supposed to have closed or getting ready to close, you would think that by all standards they would be locked already in terms of locking the interest rate. Interest rates are finite in the sense that they expire on certain days, and typically you lock a rate to cover the closing date. But if the closing date has passed, or if the closing date's pending, but it's going to be pushed out, there are fees that buyers will pay to extend the rate so that they're not subject to current market. The rates have not gone down, probably since the time someone locked 30 days ago, 45 days ago, to where they are today. So extension fees, again, are another expense, usually either borne by the lender, in our case, many times because Hurricane Ian wasn't something our customers were expecting, or but sometimes they could be borne by the customers. So recognize that these are some of the factors that your customers, your buyers could be experiencing. Nigel, I don't know if you want to add anything.
I would just say that being proactive in this case, and John or Wood Realtors we've seen over the last 15 plus years are very proactive, but you are going to have lenders, whether it's their personal situation or just a lack of knowledge, you're going to need to jump on these folks and ask some of these questions. And I know, Mike, you're really great about sending out slides, but you may want to keep stuff to say to your lender on another deal. Is their rate locked, and when does it expire? That gives you some negotiating room, or being able to talk to the seller, especially about maybe giving some latitude, making your client aware, oh yeah, you need to address that. Because at this point right now, people's hair is on fire and they're not thinking about these things. And then as far as the inspections go, being very clear with either the seller of the property or the other realtor that if the inspector or appraiser is coming out to that property, if you miss that appointment, they're not running back out in 1 or 2 hours, especially as farther north. I mean, especially you folks, or all of us here in Lee County, very different set of circumstances. Getting to certain areas, to Jerry's point earlier, could take hours. So being on top of getting the inspections done, important. Interest rates, we can't tell you where interest rates are going to go. Lenders are not going to extend rates indefinitely, in some cases not at all, because there was a storm. It's just business. So prepare your clients for that. Jerry, it's yours.
Okay, so the last slide is one you were going to touch on, Nigel. That has to do with products.
Yeah, I'm excited about this. Jerry and I were on a call yesterday. For those of you that are new that don't know, NewRez is one of the largest lenders in the country. And the reason I'm telling you that, the good news is, and I was reminded yesterday when one of my associates told me that he wouldn't be available because he and his family were coming to Florida on vacation. The rest of the world is going on. It's normal. We're a news story. So that being said, big companies like NewRez are fine financially, and they're looking at Florida saying, how do we continue our business here? So a 203K loan, basically it's a rehab loan, that's going to be expanded. Right now, it's for primary only, but we have a product called Homestyle that can be used for all types of loans. So let's say you've got a listing and it's badly damaged. That's bad news, but you don't want to lose that listing. So you ask your client what they're doing, and they say, well, you know, I don't know what I'm going to do. Well, there are products available that we're going to have, and you want to reach out to the loan officer, Jerry or myself in your office, Jerry or myself, and let us help you there. So construction to perm, I'm not going to give you a date, but we're actually going to have a new construction to perm product that could be as early as November, where it'll be available. And these will strictly be for people who want to level the current home or property and start all over again. So that's all good news. Those kind of things are going to be available from all lenders? No, but there will be some lenders like us that are being proactive and looking to not only continue their business, but replace what we're going to lose over the next 6 to 12 months. That being said, some of you know me, I'm not necessarily a cheerleader, but I'm a fairly positive guy. But I've always tried to tell you the truth. And in talking to some really smart people, being here in Florida since 1970, I think this is my 8th or 9th hurricane. Here's what's always happened after a hurricane. We watch the news and we listen to the talking heads who tell us in very official voices that this will be the end of the world for Southwest Florida. It won't recover for 2 to 3 years. I remember after the collapse, it would be 10 to 15 years before we'd recover. It's not true. And I can tell you, in talking to everyone, there's almost a level of excitement about the amount of business that's going to be created by this horrible event. And it's not just a silver lining, especially for you new realtors. In another 3 or 4 months, the calls will really pick up. We're seeing them already. People are looking at this as an opportunity. People who have lost their homes, I don't know if you all realize, but right now the real estimate is that somewhere between 200 and 250,000 people just in our market have been displaced. They have no home, they've got nowhere to go to. But, and I'll repeat that, 200 to 250,000. Many of those folks are going to stay, and the ones that leave are going to be replaced by people who see this as an opportunity. So stay in the real estate business and you're going to do well. And the last thing I would ask you to do on a personal basis before we open this up to Q&A, you have to be the voice. People are going to look to you for not only leadership, but they're going to gauge the temperature of the economy, of what's going on by how you answer questions, how you appear to them. So you're our spokesperson. If you watched ABC News last night, our state rep, Adam Botana, who lives right here in Bonita Springs, did a phenomenal job of showing, the devastation here, and then turned right around and said, but as we all know here, we're incredibly resilient. And he flat out said, we'll be open for business for season. Come on down with your families. It's going to be great. Well, that's the attitude that we all need to have as NewRez associates, and as citizens in our community. So that's my pitch. On a personal note, by the way, all of you that have reached out to me, thank you. Yes, I did lose my new home, but my old home is pretty much intact. It's got air conditioning and power, so I'm fine. But thanks for all of you that reached out. So let's open it up for Q&A, Mike.
Thank you, Nigel. Thank you, Jerry. So everybody, I have set it up so that if you'd like to unmute yourself, you should be able to do that. And please, I encourage you to deliver any questions you have. I'm also monitoring the chat if you'd like to bring us a question through that.
Hi, it's Michelle, Nick and Jerry. Question, the information you just gave us, do you have something like a sheet that we can use to mail to our customers, like over Active Pipe, to let them know what options they have and what changes there are to the mortgage process?
I'm sure we can come up with something with bullet points. Mike will send you out the slides that we've got today, but that's probably a great point. Something just very quickly, maybe just a dear client, here's a reminder of things that you need to be aware of and should do prior to closing. So that's a great idea.
Yeah, it is a great idea. And just a thought there, I think I would probably stop short of broadcasting that out through something like Active Pipe, because it's not going to apply to everybody. And there were people who it just doesn't apply to, and we might make them nervous. So I think that we can come up with some good bullet points that you can selectively get out to people perhaps. And I can tell you that Scott Kelsley has put together several mailings in Active Pipe for the purpose of just general comforting people, showing that we're standing strong, this sort of thing. So check out your account. Those are already in there.
Thank you.
Questions? Anybody else have a question? Nigel, Jerry, you might have covered this and I may have missed it. Something came in through the chat. I'll get there in a second. Time frames, these re-inspections, you might have covered this, but I mean, how long should we anticipate something like that might delay a closing?
So it's a great point, Mike, but it's really going to depend on where the property is located and the availability of the appraiser. And that, that's going to be a lender by lender basis, who they have that's available. Here's something that I would encourage you: if your lender comes back and says the appraiser on this property, because that's normally where we go first, where lenders go first, is back to the appraiser that did the appraisal on the original appraisal, because they're familiar with the property. But let's say that appraiser isn't available. You should proactively reach out to the lender and say, well, what is your process? Will you allow another appraiser or another inspector to go out and inspect the property? We will, but you would want to ask that question, Mike.
I think, Mike, it's important to kind of start it off with is just making sure the lender's got the order in place. You got to get in a queue. So you want to be sure that you start to establish the communication between the appraiser and the source at the end, so that they can coordinate the access. I mean, where I live in Fort Myers, there are most places in my immediate area are accessible. They could get to the property, it wouldn't be a problem. So, but you got to create that communication. So, and now that the things are a little bit more stable, the sooner the better for that.
I see Sarah's got a question. Would a low loan to value help? The answer is no, Sarah. What they're interested in is it doesn't matter what the loan to value is. The bottom line is they want to know that that property is not going to be an empty lot in 2 or 3 months, or worse yet, an abandoned property or one that can't be resold. So loan to value will have nothing to do with any lenders. And Fannie, Freddie. Sarah, oh, I can't see the original question, Sarah.
I can see them from here. So Sarah has, this is really an insurance question. And the question is, as it relates to closing a loan, can sellers' insurance benefit be assigned to buyers? If so, how does that affect the buyer getting the new insurance policy?
Boy, that's, I don't think, was it Ron or somebody put that out there? Our good friends at Conroy and Durant warned of that. Normally, insurance benefits cannot be assigned. And there's been lawsuits, there's been all kinds of issues. It's kind of like mortgages. You know, you can't just turn around and assign a mortgage to your buyer. Well, the same thing with insurance. So that is on a case-by-case basis. And I would encourage you as a realtor not to say to folks, you can get this done, or I think it can be done. You can put yourself and John or Wood in a bad position, but normally insurance benefits cannot be assigned. I don't know if this question was asked, but really important is that insurance companies are writing policies now. Storm's over and they're doing the same thing. If the property is structurally sound, doesn't need any repairs, they're writing policies.
Yeah, and just to reiterate on what Nigel just told you, if you get a question like that, we are experts in real estate sales. We are not expected to be experts with such a complex question. The best thing you can do right away is say, I don't know. We need to get you in touch with an attorney.
Better yet, call your agent.
Call your agent.
That's the person who can tell you flat out, or the insurance agency. They're all being very helpful, by the way. I've unfortunately talked to several insurance companies over the last week, and they're doing their best. The wait times are nowhere near as bad as you would think. If you call first thing in the morning, they're all open at 7 o'clock, or during the dinner hour, you're very likely to be on hold for less than 5 minutes, and you'll get your answer.
Another question here in the chat, the 200 to 250,000 number of displacements, is that people or homes?
People.
People.
So, divide that by 2 and look at 125 to 130,000 homes that are no longer habitable.
And Sarah has another question. Can we escrow a house with minor roof damage and screen damage? I'm not sure that I understand the full question, but.
I do. We had that during Irma, Mike, and the answer to that question is roof damage. No, because your opinion or my opinion of minor, they've been very serious about that, because minor damage can become major damage if another storm comes in. So there's no leeway on that. What we found, and I think some of you experienced during Irma, Jerry and I petitioned the company, and we actually had closings where cosmetic damage and even structures that were not part of the actual habitat. So we had some closings where we had the screen enclosure collapsed, but it was removed. Mary Adams had one where I think it was the carport, it collapsed on the car, and the picture looked horrific. But the bottom line was it didn't affect the building or the value. So again, a case-by-case basis, but as soon as you say roof, electrical, plumbing, or structural, the answer is no. They will not allow escrows.
Sarah has a follow-up question regarding, so let's say we've got that case where there's an insurance claim, we're waiting on settlement, the home is under contract. Sarah follows up and says, well, if seller has a claim, we can't close until the repairs are done?
Well, would you want to buy a car where if you said as soon as we get the wheels on it, you can drive it? That's the way lenders look at it. They don't want any more liability, especially something that can't be controlled. So the answer is most probably not.
And Jacqueline asks, how does this pertain to an empty lot? which I'm thinking it probably doesn't because there's not likely to be damages on an empty lot. I mean, that if you got something under contract, it's an empty lot. I mean, that's not going to need to be reappraised or anything or inspected. And Jacqueline, I'm not sure if that's the full context of your question or not.
Yeah, you wouldn't have insurance on that other than maybe liability insurance, but
Yeah, Jacqueline, that might be a specific question, so maybe follow up with your broker or one of us after the today's webinar, so we can get the full context of what's going on in your transaction.
you know, Mike, just a quick thought, perhaps if it's an empty lot, but it's on the water, it has a seawall. But again, very few lenders are doing lots right now. That might be something where they would, and again, lenders now have access to things that they've never had access to before. So if they're looking at pictures and there's collapsed seawalls or boats on top of lots, then that might be the case, but I can't see where a vacant lot would be any sort of jeopardy of not closing.
And by the way, Ron, and everybody's probably caught in the chat, Ron Howard, as I did, kind of reiterates on that question about things like assignment. You can also go to your managing broker with those questions. We just have to be super careful about even remotely suggesting to somebody that you can or cannot do something like that. Also, a word of caution, putting things in the contracts regarding insurance and assignment. If that needs to be done, we really need an attorney to write that language. We are still dealing with things from Hurricane Irma, where things were not, done exactly as they should have been. So just, when in question, when at all uncertain, when it's outside of the scope of what you do every day, seek counsel.
Mike, you remember that old commercial? I'm not an attorney, but I did stay at a Holiday Inn last night. Don't go to Holiday Inns.
Right. Well, we've had some good questions here, but have we covered it, everybody? Have we really done that well? No more questions?
Well, Mike, thanks for setting this up and asking us to do it. But secondly, most of we're a resource for you. If you have a lender or a loan with somebody else, we're more than happy to review it and give you advice. But I've had 2 calls since the storm from folks who asked if I could call the lender. They really could care less who Nigel Fullick is, and they certainly don't want to hear from another lender telling them what to do. So again, in some cases, you're going to have to be proactive. If it is with somebody else, my suggestion, and Jerry said it, get hold of the loan officer, make sure you can communicate with them. But if we can help you or give you advice, just pick up the phone.
And just one more quick thing here, and Donna, that's a great idea. So Donna Marcotte asked if we can do something like this from perhaps a legal perspective with Conroy and Durant. I'm working on trying to put something together. They were without power longer than one might think, given their location. So I think they're in catch-up mode right now. But don't forget that at each of your offices, you have an attorney that comes and visits. So perhaps ask your broker and maybe ask them to do something at the office at an office level as well. I think that's actually occurring right now with the CC&D attorneys. Well, everybody, I think that's it. Thanks so much for attending. We had a good audience today, and we'll try to keep the information coming your way. Stay safe and have a great day.
Thanks all.